Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at a wave trade on crude oil. Now, crude oil just bumped off of the highs here, and we've pushed all the way down to give us our fill, actually just now at 101.56. Now, I'm going to be looking to enter and place my stop a couple ticks above the high of this area here. Because we're actually just kind of scaling into this move, I don't have my stops and targets placed automatically for me, so I have to go through and place them myself. So we'll be looking at just above the low of day here for our target down here. So we're looking at taking 4 contracts off down here at 101.18. We're in short right now at 101.56, just ahead of the test of our trigger zone here, with our stop sitting up here at 101.66. Now this is a little bit of a bigger stop than we normally use, sitting at 9 ticks instead of our usual 6. But this is the kind of trade that I'm willing to accept a little bit of extra risk on, just so I can get into the downside of this move. So looking at this trade here, what we're looking at is we just had this big signal reset. And the signal reset came off of the high of day after failing to go higher. We rejected this weekly level, immediately came crashing down. Now this crash down broke below the weekly level and broke back under. In this case, if we scroll back, we can see this is the previous low of day here at 101.39. So because we broke below that previous low of day here, what we're looking to do is essentially wait for price to retrace into one of our favorite patterns, a golden wave pattern. We've got the BMTs all stacked up in the same area. We've got our trigger zone floating in here as well. That's why I'm a little bit more aggressive on this trade. But for us to enter in here in a golden wave pattern, right back down to the low of day in this case and revisit those lows. Now, there is a possibility that this will fall off a little bit harder because we are starting to move below the previous day's range. Usually that gives you kind of a heads up in terms of the bears are really in this market. Now we know the bears are in this market already because of the aggressiveness of this move right here. We saw this blow straight through what you would call, typical movement in the markets, blew right through it. So this pullback here is a really high percentage area that we're at least going to revisit this 101.29, especially go a little bit lower underneath that. So we're risking 9 ticks right now, willing to make, in this case, from 101.56 our entry down here to 101.18, 38 ticks. And that's per contract, so we're trading 4 contracts on this one. So we're looking at a really, really hefty trade here if we can get some movement down. Now, I will be looking to move my stop to break even once we hit this low down here at 101.29, just to lock out any potential risk, just to be a little bit on the safe side. Since we're going all in, all out on this one, I want to lock out my risk rather than trailing on the way down. Now, if we can get a strong move down, we might be able to expand this target a little bit further down and start digging into this current low of day, but this current low of day is held several times in the past already, where we had actually a couple exact tests right here and a bounce higher. If we can get back down into that area, we'll be looking at a relatively strong trade regardless. So I really don't want to try to tempt fate here and blow into that 101.17. That's why my target's actually at 101.18. I want to be a little bit ahead of the crowd at the low of day there. So we're in the trade short here at 101.56, just waiting for a push down into our target. This is a little bit more aggressive, even though this is a really high percentage trade to the downside. We still have these levels in the way, but because we cracked below them already, that's showing us that these levels really aren't maintaining their support and resistance strength anymore, which you can see they've acted as a couple times throughout the day. We bounced back here, we bounced right here. We also bounced off of the weekly levels up here, and now we're just starting to begin to kind of chop through those. So they're not really acting as strong as we would like to see them. So at this point in time, just filled short at 101.56, looking to move to break even once price gets down to 101.29, and then we're looking to take our profit off here at 101.18 for 38 ticks per contract. And if we pull up our handy dandy calculator, 38 at 4 contracts, looking at 152 ticks total on this trade. So even if you were only trading 1 contract, $400 a contract definitely isn't bad. We're looking at making, hopefully, if it drops, we'll be looking at making about 1,500. So relatively solid trade, just kind of waiting for it to fall from here. So we'll be back in a little bit once we get some price action in our favor. All right, folks, we're back. Just tested that 101.29, so I'm going to move my stop down to 101.56 just to lock out a little bit of that risk. Now, theoretically, we should just stay underneath these BMTs here. If we cross up, we can close a little bit early, but we're looking for price to really fall from here. We are seeing a lot of volume come in, actually pushing down already. So let's see if we can get that fill down here at 101.18. Came a tick away, and there we go, filled it, perfect. All right, so overall, really solid trade. I mean, we can't argue with that, and that's why I wanted to be a little bit ahead of the crowd. You can see we're bouncing at this current low of day. Now, that doesn't mean it's not going to break. It might very well just push right through it, but that's that bounce that I want to be a little bit concerned of. This bounce might be enough to push price a little bit higher from here. and spook a lot of people out and get out here instead of actually taking profit, even just one tick ahead. So I lose out on $40, 4 contracts, 1 tick. I lose out on $40. I still make 1,500. I'm a-okay with that. So that's why I don't like necessarily putting my target directly on the low of day, because you get that bouncing like that. So let's get the data series here to show our trade. Set that to text and markers here. Perfect. So we got short here at 101.56, took all 4 contracts off here at 101.18, 1 tick ahead of that low of day, for a total of 38 ticks on 4 contracts. And using the calculator tool again, just like we did before, 38 at 4 contracts, looking at $1,520 on the trade, less commission. So really, really solid trade overall. Can't ask for much better than that. Complete rejection from high of day right down to the low of day. So that's going to be the trade for today. If you have any questions about it, feel free to send an email to School of Trade. And don't forget to check out our trial at schooloftrade.com. Have a good one. Bye.